Hi guys, welcome to another tutorial video of me analyzing the market and sharing my insight about the market. So today I'll be on Satoshi 1000 Satoshi 1000 SATS Tether USDT perpetual contract. This is Binance chart. So I'll be analyzing Satoshi today for you guys to see my own view about where this particular pair is going to for the short time, for the long time, and also where you can pick profits. Actually, I'm already on this trade for the downside, so I'll be telling you guys how I made that decision. So let's hop in and let's do some technicals. So currently I'm on 15 minutes time frame. So I'll move up to 1 day time frame to give us some quick what they call a top-down analysis about the market. Where is the market going to for any other thing? So just give me a minute, let me take this off, all this off. Okay, so this is Satoshi 1 day time frame. So as you can see, from the look in the market from a 1 day time frame, market is actually bearish. Whichever trend line you want to pick, this one or this one or this, that is picking this next high, but probably this is not valid. The market has, so we'll be taking this one off. We'll be working with this. So as you can see, we can see the market is bearish from a 1 day time frame, and we can see series of, this is a high and this is a low. This is another high. This is a low. So as we can see in the market, we can see series of high, lower low, lower high, lower low, and that this also is a high. Let's call this a high because there is a break here, and this also will be a low. So if you can see in the market, you can see series of higher highs and higher low, series of high, lower low, lower high, lower low, lower high in the market. So the market is bearish from a 1 day time frame. So when, as we have seen in the 1 day time frame, the market is bearish, we'll hop down to a smaller time frame to still analyze the market. Now, reason for this is to have a lesser risk and a big reward. But let's see if we can pick one or two things from a 1 day time frame. So as we can see here, after this break over here, this is the most recent high. This point here is the most recent high. So once the market breaks this high, we'll say the market is looking for the upside. And now before this high, let me take this off. Before this high, there is nothing else except for this candle here, this bearish candle, which taking all these parts to itself. Okay. Because above this bearish candle, we have nothing else. We have nothing else. So with that being said, now markets break down to the downside. There's what we call inducement. I call it liquidity. For the market to move, the market needs liquidity, and the market needs money, your money or other people's money to move. So the first recent high is the first liquidity, the internal liquidity in the market, which market needs to take out before continuing its trend, or will I say before we pick a signal. So once the first internal high is taken, then we can see the market has taken out liquidity to move to the downside. So once the market take out that most recent high, we'll start looking for what entries. So as market has taken out the liquidity, which is here, I always put it as $sign, because it's money hanging over there. Then we'll start looking for entry. So here is the last order block, whatever you want to call it, order flow. Since it took out, we can see something like this in the market. You can call it an order flow. So it's depending on you. It's still an order block, so we still call it institutional candle. So it's depending on the trader and what you know that candle for. So above that candle, we have nothing else for the market to touch any other block or other flow, because once the market go above that institutional candle, that means it is taking out our high, probably, or sweeping the high. So let's adjust this to this point here. Now the market tap on it, to the downside, push back up and break down. Some people might have picked some trade here, but actually throughout this whole stuff, I was not available, I was not around, doing some other stuff. So but now I am here to give you the update. For those trading with support and resistance, you can bear me witness that this is a resistance level, because we have seen the market tap on it several times and rejecting it. So I'm giving us series of confirmation. If you should zoom out, you find out that the market is bearish. Now coming to what is happening in the market, the current situation in the market, you can find out that we are still seeing a rejection to the upside. So now I just picked my trade yesterday before today started. Reason be that as I've seen this rejection to the upside, now there is this bullish candle over this bearish candle over here. This one in particular. Now this bearish candle took out this candle this candle high, guys, which is the last previous high in the market. I'm talking about internal structure now. The last previous high in the market, and close below it, more like sweeping the liquidity, packing out the whole money around that region, around that resistance level, and giving us a reaction to the downside. Now after this reaction, we can see this candle here is an order block. Let me separate it and give okay, let me still leave that supporter, that resistance level there. So that candle is a resistance, is an order block. That candle is an order block. So with that, we can jump into a smaller time frame to pick entries. So don't forget, the overall flow of the market on Satoshi is bearish, and we are now on the current situation of what is going on in the market, and I'm here to give you a quick short signal, more like an educative, my own personal insight on what is happening in the market. So let's jump down to 1 hour, or let's take 4 hours first before 1 hour. So this is our, okay, let me give it a name. So and we can also see on the 4 hours time frame, we can see the market rejecting that level. So our resistance level, and this one here is the 1 day order block. So now in our 1 day order block, on a 4 hours time frame, let me shift this so we can see it clearly. On a 4 hours time frame, let me show us what we are having here. On a 4 hours time frame, so from this high, the market is giving us something like this. Now same way we said on the 1 day time frame, market needs to take out the first internal high before we look for an entry. So it's the same technique we'll be using on a 4 hours time frame. So from that high, we can see series of lower low, lower high, lower low, lower high. Now this point here, This point here is the last internal move, internal high before, it's the last internal high. So we'll be taking that as our liquidity. Once market take it out, then we look for entry. Now once market take that internal high, we start from the left hand side, start checking for order block or order flow that the market have not yet tested, have not yet mitigated, for us to pick our entry. I forgot to say it when we're analyzing the 1-day time frame. So we start from the left hand side to the right hand side. That is from the previous high down to pick an entry. So after market has taken out this internal high, the last order block here should be this this particular candle. If I am not mistaken, let me change the color so we'll be able to get, okay, why is, and this one should be green. So I hope you can see what I'm doing here. But as we can see, that is the last order block, but market broke above it. Market broke above it but did not close above it. Now let me show you what I mean. So I'll be taking this out to show us what I am talking about. As you can see, that bullish candle here, so I'm talking about this particular bullish candle here, took out what? The liquidity of that order block. Plenty sellers are already there. The market took out their liquidity. Maybe the market wants to grab enough liquidity before pushing to the downside. And again, you can see from this point, even the next bullish candle still did not close above the other previous bullish candle. So I'm talking about this candle and this candle. You can see all of these were just sweeping off liquidity, taking out people's money and still giving a rejection to the upside and telling us I want to go down. So if you're entering this trade from a 4 hours time frame, probably your stop loss should be above this high. A safer stop loss should be above that high. So I've seen it from a 4 hours time frame, and if your stop loss is above that high, probably something like this should be your entry. Yes, you'll be taking this last above it, and here should be your what? Final TP. This is 1.57, which is actually bad for those that love big winning ratio, and probably this is my first TP, and my final TP will be previous low, which is 5.47, which is okay for me. So as we have seen in 4 hours, I'm just trying to make the video as short as I can. As we have seen in 4 hours, let's move down to 1 hour time frame to see what's going on a 1 hour time frame. So we're moving down to 1 hour time frame. For a 1 hour time frame, the market is pointing bullish. High, low, high. I'm talking about swing high and swing low. So we don't know if the market is going up or it will be going down. So, but in the internal structure of the 1 hour time frame, you can see something like this. Now, but one thing you have in the back of your mind, the market follow. A smaller time frame cannot determine the flow of the market. Big traders, banks, some of them don't come down to 1 hour. 4 hours, 1 day is where they stop analyzing the market. And those people are the ones that tells us the flow of the market. So I'll be stopping here for now, for today, on Satoshi, and let's see if we can have some extra confirmation about our sell signal. Let's see, let me pull out a 90 minutes trend line. So actually the price is far from the trend line, but you can see that the trend line is saying the market is bullish because prices are forming above the trend line. Let's check that for 4 hours and 1 day to see what the trend line is saying. Still the same thing for 4 hours. It's saying the market is bullish. And for a 1 day, it's ranging because now you can see the market is still saying bullish. Why I'm saying the market is ranging, you can see the market broke the trend line down, break it to the upside again, and if you notice the trend line is straight, it's not giving a slanty direction. Let's see if we have another indicator to pull out to see the direction of the market. Now using MACD divergence, also we can see the market is actually pointing down. Now reason be that you can see here in the markets, the MACD is giving, this is a high, a low, and a little high. So there is a divergence here, if you can see this. But when you look at the candle, you find out it is pointing upward, while on the MACD is pointing downward. So actually we are expecting the market to go to the downside, to drop from this. And once this trend line on the MACD cross below 0 to the downside, is another confirmation that the market will be going bearish. So thank you guys. Do subscribe to the channel for more educative posts, and educative posts and educative signals. Thank you, guys.